It's very nice to be here in Mumbai. Thank you very much for having the two of us here. I thought that, Qing and I basically thought we would have a conversation this afternoon to talk about digital finance in China. And for those of you who have had a look at digital finance in China, we think, both of us obviously being Chinese, we think that China is also very much leading the world in digital finance business models. And so one of the things that we wanted to do firstly is maybe share with you a little bit about what's happening in digital finance in China. We then would suggest that we talk about what's driving digital finance to be so pervasive and to accelerate so quickly. Thirdly, we thought we'd have a conversation around how Chinese banks are responding to the developments in digital finance. And then finally, we also want to leave you all with some takeaways around what might be some of the lessons and learnings from the development of digital finance in China, which could be very relevant to all of you in India. So maybe firstly, let me say a few words about why China is leading the world in, or why we think that China is leading the world in digital finance. And I think, so there's a lot of stuff that happens in China that may not be very visible to the rest of the world. And some of these things we'd like to kind of just maybe walk through. If you look at China today, we have something like 750 million digital mobile users. And we think that we've actually reached critical mass. There's a huge network effect taking place in digital finance. And last week we had in Hong Kong a very senior forum of many of our senior banking clients, and we talked about the disruption effects that digital was having on the market. And let me just maybe leave you with a few initial statistics. So maybe some of you may have heard of Alibaba, yeah, and some of the impact that Alibaba has been having on financial services. So Alibaba has a unit called Ant Financial Services. Ant, when it first launched Yerbao, which is in Chinese it means little treasure, Yerbao managed to get within 1 year something like 100 million new accounts, and also raised $100 billion of assets under management for its mutual fund offering. Alibaba has also been in the microloan business, literally lending out hundreds of billions of renminbi of loans to small medium enterprises, which is one area which has been an area of real difficulty to bank profitably in China. And they've been able to do that with much lower non-performing loans and much higher ROE. We also have Tencent, which runs the very popular WeChat application. So all of us in China are on WeChat. And Tencent has been able to leverage that WeChat platform to sell fund products, index products, and I think in the last couple of weeks, actually last week it launched its actively managed fund product. The banks haven't been still either. So the traditional banks have been also very active in digital finance. We see actually there have been 18 digital banks launched in China since the first one which was launched was Minsheng in February 2014. Yes. And then the big 5 banks all have been working on their digital initiatives. So it's not only that, conglomerates have really been very active in this space. So you see folks like Suning, Haier, Shunfeng, which is a logistics player, China Resources, many different banks have been very active.
Everybody is going digital.
Yeah. So there are lots and lots of different plays. And so it's not just about banking. I think we've talked, today I've kind of mentioned a lot about banking, but also microfinance, peer-to-peer network.
Logistic, now it's expanding everywhere.
Microcredit, wealth management. So very, very many different types of financial services.
Actually, Chinese regulators just issue some sort of regulation about how to boost the international plus business in every sectors. So that's going to be huge, and the expanding speed is going to be even faster.
So one of the things that Tjun and I wanted to talk about is like what is actually driving digital finance in China?
I would say that's pretty simple. Just because the huge population in China, everybody is, the internet connected everybody together. For the past 15 years, the average salary it's increased like 10% every year. So people have money to do more shopping, and every sector is over capacity. All we need is some middlemen to connect them together. That's the e-commerce step in. So that's very nature ways. And on the other side, the infrastructure in China was so, the government and the companies invest so much money into these sectors, make a solid base for it's possible to happen. Yeah.
So one of the things that we see a lot of in China is obviously how digital really pervades, it's very pervasive. So it's in every element of Chinese life.
Of course. And on the contrast, the traditional bank, though we are doing all those back office servicing for them, transfer money for them, but theoretically we are disappeared in the everyday life scenario of all the customers. So that's going to be a big problem for us.
I think it's very difficult now in China to go anywhere even in Shanghai to catch a taxi if you don't have
a software,
or Didi Dache, one of these taxi apps.
Sure. So everything is going digital, like I said. You can't even, like people like me, I work for a bank. I go to a bank for work. But for a personal, like financial requirement, everything, I don't even need to step in a bank for like past 3 years, unless I lost my password or something.
In fact, I've actually not. I've only gone to a bank because I serve banks like ICBC.
Thank you.
So what we're seeing, I think, in China is that many of the industry barriers are collapsing. Right, so the traditional boundaries between industries that used to exist between banking and the restaurant business, or banking and the music business or the e-commerce business, they're collapsing very rapidly.
Sure.
And we're seeing a lot of different players enter this space.
Of course. And another big reason why e-commerce is so popular is a lot of Chinese companies, especially small and medium-sized enterprise, SME, they cannot really get funding from big banks just because the service cost is so high. So they are naturally not our big bank like ICBC. They are not our targets, but they are a huge number of them. Like there are 50. We just talked about, there are 50 million, right? 50 million oral MSE in China. And they contribute like 50% of the GDP, 60% of the employment, right? So they are huge. But when they need money, it's always so rushed. And they probably just need like 1 week. And they need quick response from bank, which bank like ICBC cannot do that in a traditional way. So that's why, like you just said, the Alibaba, they can move to like Ali Loan, which is P2P, can satisfy their all the requirements.
So I think there are four major factors behind why digital finance has taken off so quickly in China. And I think you mentioned just the first one of them, which is financial repression,
Yes.
which is that the supply is not meeting demand for financial services.
Probably it's same here, I mean, in India.
I imagine it's quite similar here in India, but SMEs are not getting lending, and they are actually twice as profitable as state-owned enterprises in terms of ROE, but it's very difficult to lend to them. We have many young consumers who are finding it difficult to. They're not very wealthy. They're not affluent. They don't have large deposits. They find it hard to access wealth management services.
Of course, that's exactly why the major user of those third-party apps and financial planning programs is those young people in China.
Yeah, so
the majority of them.
I think we know Yurbao, the Alibaba
Yes.
application. Literally, if you haven't seen it, the app allows you to typical financial management, wealth management in China. You need to have a minimum 50,000 RMB to buy wealth products. Alibaba basically brought that number down to 1 RMB. So your minimum investment size for a consumer is 1 RMB on Yurbao, and literally you can swipe in, swipe out. It's as simple as that. Swipe in, swipe out.
And,
right?
and the interest rate, it's even higher than you make the deposits into a bank.
Yes.
So that's amazing.
And daily liquidity. So, of course, this was a very, very big hit product for Ali, and I think it's a lot of financial services, digital finance in China has been driven by similar types of solutions to serve this financial repression.
That's huge needs. That's why the Yuebao can become, the size is around like 500 billion RMB in just 1 year. It makes it the number one in terms of the market funds, number one in China, and number 3 in the world, right? That's amazing.
The scale was quite incredible.
Yes.
I think maybe let's move on. I think the second major factor, I think, is technology advancement that has made this all possible. And mobile, pervasive mobile, always on, anytime, anywhere. Big data has been another big outcome of this, of having better technology, so we can now make much better decision making. And thirdly, cloud computing has really lowered the cost of servicing. So you imagine with Yuebao, 1 RMB for us to be able to fund an account has also really been the costs have been lowered dramatically in the ability to serve customers.
Yes, and it's also, I mean, cost a lot of investment in the telecommunication. Like I read the news about the call drops in Indian market, call drops a lot. It's just because maybe the tower in India is not good enough to coverage everywhere. I checked online, the whole country, the tower number is it's less than 500,000. But in China, only the 4G, the mobile tower is around 1.3 million. So you need put more money into it to make sure it's covered everywhere. When you walk, there is signal everywhere, and you can surf online everywhere, right?
The infrastructure has certainly come a long way.
Yes, it needs time to play out.
Very, very short period of time.
Yeah. But
I think this has also had an effect on consumer behavior, on customer behavior. So customers are now expecting financial services to be embedded in many of their real life scenarios. They don't expect to go to a bank. They expect, and they've been very much trained by the e-commerce firms like Alibaba and to expect to have payment services embedded inside their e-commerce platforms, to have fund products embedded inside their e-commerce platforms, and similarly with Tencent. And I think customer expectations have changed dramatically in the last 12 to 18 months?
Sure. Basically, the digital company, what they are doing is try to keep people in your house. You never need to step out your house to do everything, to do anything, right?
Maybe one of the things that I think would be interesting to comment on, and maybe that's a question that I hear a lot from in India, is about regulatory, the regulatory view towards digital finance. And in China, very much, digital finance is now increasingly being regulated, and the regulators actually include it in their thinking, and they actually very much want to promote digital finance. How do you see that between India and China?
That's a difficult one. Of course, one of the major reasons why the digital finance in China can grow so fast is the regulatory attitude is pretty open. And basically, all the things are happening too fast. And the regulators, I don't think they have enough time to do the response quickly. And after 5 or 6 years, they realize it's going to be an innovative way to develop economy. So they are pretty open to that. But in India, as a foreign bank in India, we facing, I would say, a little bit more restrictions to do business here than back in China. So I don't think the regulation environment here would be more friendly than what Chinese did like 5 years ago. Like now, last week there is some payment bank stuff going out. They forbid those payment bank to do lending things. That's definitely more restricted here, I would say.
I think maybe one of the things we should also perhaps cover is how banks are responding in China.
Of course.
So we've heard a lot about Ali, we've heard a lot about Tencent and others, but it's also quite interesting to hear how the banks are responding. And one things we hear often is people need banking, not necessarily banks. Tjun, how would you think about this?
Yes, now the traditional bank like ICBC, we call it the elephant. We need to learn to dance with those digital companies. That's what we are doing. First, a lot of banks try to cooperate with those digital players in terms of to provide custody or some risk control services for them. And another bunch of banks like ICBC, we put together an ICBC platform ourselves. We are trying to do the same business as Alibaba. Because ICBC as the world's biggest bank, we have like 400 million customers, individual customers, and we have 5 million corporate customers. We try to attract some of them, especially those good ones, to the platform to sell products directly to our customers. So we can step in at the first time when the deal is sealed. When customers want to purchase anything on this platform, they will naturally use ICBC service. Anyway, what we are doing is trying to represent us into the real life scenario of our customers. Another thing we are doing right now is what we call O2O, is online to offline. ICBC, we are handling like 400 million transactions every day. But 87% of them are done through internet. That accounts for like 30,000 physical branches volume. But now we have 17,000 branches. We try to make it offline stock for our customers. We are trying to test it by present our customers physically in our branch, we put like iPhone 6 over there. So before you can make your decision to buy an iPhone 6, you can go to our branch and feel it, test it. Once you like it, you can scan the quick responsible bars next to the iPhone 6 and do the transaction in just 1 minute. That's what we are trying to do.
But it's quite interesting. All the big four, the big five,
Yes.
they're all embracing the digital and not just digitizing the existing bank, which is obviously something that they're doing, not just creating digital banks. There are 18 digital-only banks now in China, but also extending themselves into the ecosystem of customers. Why do you feel it's necessary to do this?
We have to do this. We don't have much choice. Otherwise, as I said, you're going to disappear totally from our customers' real life. And we don't have the first-hand information about our customers. If you don't have information or data, you can do nothing, further, right? So it's more like to accept a challenge in a hurry.
And do you find the customer is different between your digital channel and your physical channels?
Of course. Those customers, basically for ICBC, our customers, typically customers are those pretty, I would say, rich, and their consuming power is it's much better. So they would like to purchase goods, those renowned goods, high quality goods through our internet. It's more like B2C, it's not C2C, something different.
Okay. So one of the things we took a look at also is how the banks have fared so far. And I guess there's two ways to view this. One, there's a lot of catch up to do for the banks against the digital giants. The other is there's actually an opportunity for growth. So how do the banks feel about where they stand in developing out e-commerce marketplaces?
Of course, we feel terrible about that. But it's only took like 15 months for ICBC to put together a platform, and now we are number 3 in the China market. I would say there is a lot of things to do, but we cannot do it in the same model what they are like Alibaba did. If they ever want to catch up, we need to figure out the right way, a different model, probably cooperate with some conglomerate to do something different to catch up. Yeah, that's okay.
So maybe let me just quickly, because I'm conscious of time, quickly talk about some of the learnings for banks from the experience in China, and maybe five quick ones, and maybe I could just quickly cycle through them, and I'll maybe ask Tjun for you to comment. Customer centricity. So I think we've talked a lot about taking the customer's point of view and embedding yourself as a bank into the customer real life scenario and trying to help them solve pain points. The power of data and analytics, being able to better make decisions, whether it's about propensity marketing or it's about risk. So I think we talked a bit about unstructured data being a really
Yes.
challenging thing to address.
Sure. The biggest advantage of those digital players, they have the data of their customers. And those data are more, it's not a structured one. It's more like which website are you serving on? Why do you click on this button rather than that? Why do you close this website in just 3 seconds? That's different information or data. You need to do a little bit different, like data mining.
I think you had a great example for me earlier about whether someone filled in the form with
Yes,
capitals
yes.
or not.
Yes. Yeah. Like when we grant credit line, typically to some customers, we need to do some scorecard. We probably have like 100 parameters, but for those digital players, they have like 10,000 parameters. One example could be if you fill out all those forms with your email address or in capital letter, they will decline this customer. Just because this customer seemed like he couldn't care less about this form. Or if the customer fill out the form like within 10 minutes, they probably gonna tend to decline it. It's more than 10 minutes, they will think about. They will consider customer. So that's different model. That's why they can do it. Like the P2P companies, Ali, Long, they can do it, grow so quickly while the non-performing loan still keep like less than 1%. Just to think about it, they charge those customers like 15% interest rate.
For unsecured lending.
Yeah, but for us, typically we just charge like 5%. And at the same time, their non-performing loan is 1%. That's huge.
So I think we've seen the return on equity in this business. I think for the Chinese banks, it's typically about 8% in unsecured SME versus something like 35 to 40% in some of the more data-enabled digital models for unsecured SME lending, which is a massive difference.
That's why we are dying to enter in this market.
Partnerships is also very important. I think very much when we talk to and work with corporates ask, I think very much think of themselves as a corporate client to a bank, but also as a financial institution partner for banks. And I think there's a lot of value there, and a lot of value from what we see with many of the conglomerates entering financial services in China. Having an internet culture, so how you have an adaptive organization. Agile is a topic which often comes up. Experimentation, innovation, not normal terms or adjectives used to describe a bank, the banking sector. And then creative destruction. I guess, we were having a conversation earlier that you got to do it before somebody else does it to your business.
Yes. But it's really hard, especially for the big bank like ICBC. So that's why we choose to do the ICBC as we probably just put aside a bunch of people function to do it. We're not going to do it with we have like 400,000 employees. We can't turn over overnight, but we will give it a test. If it's things moving on very well, then we will expand it.
So I just thought I'd share a quick stat. So last week at our digital disruption conference in Hong Kong, we actually asked a number of the banking participants, did you think that the digital players will win? Did you think that the banks will end up winning? Or do you think that it's going to be a collaboration of the two? And I actually wonder what this audience thinks. So who thinks the digital players will win out in digital finance? Okay.
Nobody.
It's who thinks the banks are going to win out? Okay. Very skewed, huh? And who thinks it's going to be a partnership between the digital players and the banks? Okay. All right. So I'll share with you the results in Hong Kong. So you were a little bit more skewed in Hong Kong. I think there was 10% who thought that the digital players were going to win, and there was a good representation from fintech players in the room. 10% were die-hard bankers, and they thought the banks were going to win. And then actually most of the room, 80%, thought that we were going to see the future of banking to be much more about collaboration and partnership between banks and non-banks as the financial services value chains are deconstructed and different components go to different players. So maybe we can put our conversation to a stop here and see whether you have any questions for us. Sorry, could you repeat the question?
What is the digital scene in far-off villages in China? What is the digital penetration in rural China? And how does this work in village?
So what I think the answer is,
The digital thing?
okay, no, so what is happening in digital finance?
In rural China. Okay. I would say, because in China, as I said, infrastructure is pretty developed, even in rural area. Typically, if I traveled in China, you always have the internet connection. You always have signals. So it's just take times to play out. You need time to educate them. But now there is no limitation. A lot of rural peoples, they are using the Taobao everywhere. The only problem is the logistics. The last mile delivery would still be a problem. But now a lot of conglomerates is trying to build up those stuffs in what we said, tier 3, tier 4 cities. They have a huge plan to solve this problem.
So maybe I comment, just add to that. I think banking in China has been very much for the affluent in the last couple of decades, and particularly for wealth management type services. What we found is digital has enabled financial inclusion for large groups of customers who didn't have access to financial services. And so what you see with what Alibaba has done with financial services through Ant is now being able to include a whole bunch of new customers that couldn't be served properly, right? So we're talking about consumers, about 275 million households who didn't have access to high-end financial services can now be served through digital models. We see a lot of small medium enterprises who probably from a scoring perspective wouldn't have done well because they don't have fixed asset collateral to be able to be lent money. They are now able to be served through digital models with data-enabled models. And so actually in China, because of the high penetration of digital connectivity in rural areas, they've all been brought into the economy.
And another thing was to mention is for those rural people, they are not tend to easily trust those digital things. So it's it's our advantage as a traditional big bank to go into those tier 3 or 4 to convince them to use those digital stuff, platform of like ICBC.
Is there a mic?
You can.
From the loans, do you expect a rise in non-performing assets from the loans being given by the new digital players? Right now the going is good, but is there a worry about NPAs and stability issues and so on?
I can take this. Yes. Actually, what we call it's P2P lenders in China, peer-to-peer. Those digital lenders, it's around like 2,500 now in China. But only the first half of this year, there is around 300 gone bankrupt. Just because the risk control, they don't really have people or model to control the risk. There is not only credit risk, it's some other like liquidity risk. So for those small players, definitely the non-performing loan is going to be skyrocket high. But for the people like Ali Long, just because they have their model and their information, the data, they probably can control it in a very good way. That's actually, they did it.
I think the key question is, do you have an advantaged lending model? I think where Ali comes to play, whether it's Hire, who basically use they use their entire supply chain as a customer base. There you have an advantage where you have data, you actually are able to dynamically assess creditworthiness of customers because you see dynamic information. Then I think you have an advantage. Where you have no advantage, like many P2P players, and I think it's much more challenging.
Of course. Actually, there are more and more people make job jumping from bank to P2P. Especially those risk control guys are so popular because P2P, they need that. For the model, like, see, the traditional bank's model, if we want to grant credit lines to company like Flipkart or Snapshot, it won't work because they keep losing money, actually burning money. But it's just a different type of models. If Ali Long run the model and they will say Flipkart or Snapshot, they have a huge customer base, so it's worthy to lend money to them. That's another thing.
Do we have another question there?
Can I ask one more? You talked about the difference in regulatory approach between China and India. Is there also a problem, when we compare the speed at which the Chinese system has grown versus what's happening in India? Do you see access to capital also as something which prevents the growth of the whole digital revolution, fintech, and banks and so on? Is access to capital a limiting factor for the growth in India?
So I think in China we see lots of capital. So capital is not an issue funding is not an issue in China. It's a question of whether the people who need it can get it. And so actually it's about imbalances in the financing system, which is why the regulators are trying to push digital finance, actually very supportive of digital finance, because they want to be able to address some of those imbalances. I think what we will see over time is the non-large banks are going to be given access to the capital markets because China is trying to build a multi-tier financing system. And so you'll see many of these smaller players being able to get access to perhaps the interbank market to be able to fund themselves. I think the key challenge obviously is whether or not they have an advantaged model where they can find those creditworthy customers to lend to.
And actually, if you check the number of Indian market, those digital players, they get record high capital injections from different investors, like Alibaba invested in the Snapshot, Paytm. There are a lot of funds like Tiger Funds investing in the Flipkart. Another reason why the access would be pretty good is because those funds or those investors, they have experience coming from China. Like Alibaba, they definitely feel pretty safe to invest in the Snapshot. And they will continue to do it because they think the experience can be copied, right? So I don't think the capital would be a problem.
I think we're out of time. Okay, so thank you very much for joining us.
Thank you.